going on, guys? Biggest bullish investor here. I just thought that I would take some time out on this holiday and show off my portfolio as well as give you guys an update on what's been going on in my life. So without further ado, let's get right into the video. The last time that I talked to you guys was March 20th. My portfolio was sitting at $29,394 with a loss, an all-time loss of $8,391. I was also hit with a slew of financial and family issues that were crippling my ability to invest, as my fiance had gotten into a major car accident. My mother-in-law also was diagnosed with a terminal illness, and my grandmother had broke her hip, and I was on unemployment. So all of those factors, had really hit me all at once, as well as this pandemic. So I just thought I'd give you guys an update on those issues. We'll start off with, the worst bit of news. On April 9th, my grandmother had passed away due to complications from the coronavirus she had caught while in the rehabilitation center. Followed by that, 2 weeks later, my father had a major stroke, and he was placed, ironically, in the same nursing home that my grandmother was placed in, as the hospital, was overflowing with people. But he's doing much better now. And my fiance has been doing, rehabilitation for her accident. She's getting much better, so things are looking up from that standpoint. And for my mother-in-law, there hasn't been any real changes in, her health. So let's get into how the portfolio has been doing. On Thursday, the portfolio lost $56.70 during regular hours trading, and it gained back $23.25 during after hours trading. For the week, it was pretty much a flat week. Nothing was going on, as we only had a 4-day trading week. I was down $117.92. For the month, we're down $3,697.41 for a 6% loss. For the last 3 months, we're up $6,752.71 for a total return of 13.6%. For the year, we are still down. We're down 12.85%, or a monetary loss of $8,280.92. And for the year, we have finally not for the year, all time, we have gotten back positive. We only have a modest 3.2% return, or $1,762.42. So there has been some big changes in our portfolio. We have condensed it a lot. So what we will talk about first is we will talk about what we sold in the portfolio. And what we sold in the portfolio was GM. The last time you guys saw the portfolio, GM was trading at $17.91, and I had a average cost in GM of $29.47. I had 305 shares, and my total loss during that time was $3,526.72, or a total loss of negative 39%. When I did sell GM, we had a surge in the market. I sold GM on June 5th at $30.24. I sold all of the shares, and I netted a $233 profit, so that was a 3% gain. I guess I was happy because GM is not one of these companies that I want to hold while this type of pandemic is going on. I will probably be looking to get into it once we get more certainty in what's going on in the market. But I was fortunate enough to make a positive return on GM. GM also had made up 39% of our portfolio. So we were able to sell GM. And what I did was I sold GM and I basically put all of that profit into, I put all of that equity into Berkshire Hathaway. As I told you guys last video, that is the company that I believe in going forward. So let's go into these companies one by one and I'll show off my average cost. So the last time we talked, I had 15 shares of Berkshire Hathaway and my average cost was $210.68, and I had a negative return of $630.38, or a negative 20% loss. So now we are sitting at 123 shares with an average cost of $185.72. GM, the last time we talked, GM made up 8.6% of our portfolio. It now makes up close to 40% of our portfolio. We will continue each week to buy a share of Berkshire Hathaway until it fits with our average costs, as right now it's trading under our average cost. But we will continue to add to Berkshire Hathaway until it gets in line with our average cost. We do have the correct position that we wanted. We wanted to get 100 shares of Berkshire Hathaway. So that's where we're going with that. Next is Bank of America. The last time we talked, Bank of America was trading at $19.55. We owned 431 shares. Now we are sitting at 650 shares of Bank of America. We had an average cost of $25.48. We have gotten our average cost down to $24.46, and we had a negative return of $2,555.96, or negative 23% return. Now we are sitting at $751 loss or a negative return of 4.7%. What we are currently doing with Bank of America is our sweet spot is 600 shares of Bank of America. But what I am currently doing is I'm trying to get it up to 700 shares and continue to lower my average cost, and then I am selling calls with those extra 100 shares that I get. So right now I have an options play going on with Bank of America to sell it at a $25 strike price. I made $15 on it. So if we sell these 100 shares at $25, it's not going to hurt me, as I know that we're not out of the woods yet, and Bank of America can go lower. So we'll sell out of those 100 shares, then buy back in, and continue to do that until we have an excellent average cost. I will not buy Bank of America when it's just like Berkshire Hathaway, when it's above my average cost. Currently, we receive a dividend from the company of $108, I believe. Yeah, so we received a dividend last month for $108 with 600 shares. So we are happy with the 600 shares that we have at Bank of America. Moving on. Going back to Bank of America. Bank of America, the last time we talked, it made up 28% of our portfolio. It is currently sitting at 27% of our portfolio. Next is Disney. The last time we talked, Disney was trading at $85.78. For right now. So currently it's trading at $112.20. So Disney has come back. We had 127 shares of Disney, and we we are still sitting at that 127 shares mark. So we did not really take advantage of buying any of Disney on the dip. Our average cost is still the same, $111.90. We were down in Disney the last time we talked, $3,317.27, or a total negative return of 23%. Now we are slightly positive on Disney, $38.07. Disney is a fantastic company. It's just there's so much going on, and I have so many positions that I'm working on right now that I feel bad that I'm neglecting one of my favorite companies in the stock market currently. If we do stumble on some type of funds where we're able to take care of the other two companies that I have listed ahead of it, which are Berkshire Hathaway and Fix and Bank of America, Disney is definitely next on the play. The last time, I showed off the portfolio, Disney made up 37% of the portfolio. It is now sitting at 25% of our portfolio. Aurora Cannabis, one of the biggest disappointing stocks that I've invested in, but I do understand that this is a speculation play. The last time we talked, I had 1,000 shares of. It was trading at 75 cents. It's trading at $12 only because of the reverse split that it did. So they reverse split me, and I think that brought me down to 88 shares because I had 1,000 shares, and I just bumped it up. I brought 12 additional shares. My average cost is $43.32. I do not see this company hitting $43, even with the positive outlooks that you could probably look forward to the company, potentially getting a CEO, potentially becoming EBITDA positive. I don't see this stock, especially with the current market, the current way the market is going, hitting $43.32. However, I do know that those type of headwinds could potentially knock down this 72% loss that I'm sitting in the company. The last time we talked, I was sitting at a $3,340 loss, or a total loss of 81.5%. Now we're still around the same area. It's a $3,112 loss, or 71.86%. Aurora Cannabis made up 2.5% of my portfolio. It is now sitting around the same. It's a 2.7% stake in our portfolio. So we will hold Aurora, and we will look for positive news to give us some type of tailwind, and then we will probably consider. I might be shooting for the stars. I probably say that this company could maybe go up to between $25 to $30 a share with those type of headwinds. So we'll probably be looking at that potentially. And our last stock in our portfolio is Apple Hospitality. Apple Hospitality is just a REIT play. This was a play that I did to make dividends every month, but right now, while this pandemic is going on, they have cut their dividend. They are not paying out a dividend as they are trying to survive. It was trading at $5.36. The last time we talked, it has made a little bit of a gain. So we're at $9.42. I own 235 shares, so I have not averaged down on this position. My average cost is still $16.92. The last time we talked, I was down $2,717.47 for a negative return of 68%. Apple made up 4.25% of our portfolio. It is now sitting at just under 4% of our portfolio. if I do, again, once again, after Disney, if I do have a little bit of money left over, I will add a little bit of Apple. Anything under $10, I believe, is a buy. Apple, every time there's good news in the stock market, the company shoots up to $10 or higher. So anything under $10 to me is a buy. So that's pretty much it for this portfolio. I was also able to add a little bit of funds into our Webull portfolio as well. I just want to show that off before I let you guys go. All right. So for our Webull portfolio, we're sitting at $1,000. I bought 31 shares of Uber, and Uber is down by about 20 cents. And I own 1 share of Starbucks. So that is our Webull portfolio. I will continue to add to Uber on dips. And this is just a set it and forget it portfolio. So once again, I definitely appreciate you guys checking out my video and hanging out with me during your pandemic holiday. You guys stay safe and enjoy the rest of the weekend. Thank you.